when we started credit last year, we saw the merchants needed a lot of short-term credit because of the credit cycle in the country. Merchants were not even able to find short-term credit. The long-term process doesn't work for most of the small merchants, and the traditional credit model, which looks at balance sheets, profitability, doesn't work for most startups. So the idea is, how could we provide a short-term flexible credit? And that's where the idea of corporate credit card was born. The way we are doing it is very different. We are doing dynamic limits. So the limits vary based on your usage of the Razorpay platform, based on how your money flow happens, and based on that, we can start from as low as 10,000 rupees, go up to as high as 25 lakh rupees of credit limit.
So, and of course, you will bundle in a lot more features to ensure that startups and businesses. Shashank, interesting, you also announced an acquisition in the space of payroll management. Largely, how does it really fall into larger plans that Razorpay has for the ecosystem? You've been adding products to sort of be a full stack player across the system.
See, our vision for the company is to provide a suite of financial products and help a business manage money end to end. So we already had a suite of products which deal with payments for a company. Now we're focusing on building out our payout stack as well, which is on top of Razorpay X, our neo-banking platform. If you look at a business spends, payroll is one of the major spends for a business and one of the major headaches as well today. It's a really fragmented market. You have a lot of manual operations, and what we thought is strive for disruption in that sense, right? So that is why we went into it. We watched how our own payroll works, right? And we thought, okay, what should we do here, right? And we had a typical evaluation model around whether we should build it or we should partner. Given the ecosystem is so fragmented, we couldn't see a clear market leader. But we saw one good company out there which is building payroll in the way we would want to build, and that is how we decided it's best to acquire.
And you felt that an inorganic opportunity makes sense.
Absolutely.
Ashil, I ask you this all the time in terms of future of digital payments itself. From the era of wallets to UPI, the disruption is happening every 6 months as we talk. So, what really is the future of digital payments right now? And India is in a very interesting cusp in terms of mobile phone adoption and the payment system taking off.
No, so as you heard Dilip as well, nobody knows what is going to be a single dominant instrument. I think our view is that the market will remain fragmented. RBI's view is also that they don't want to monopolize with one single instrument or one single player. They want it to be a healthy competitive space. And because of that, there is an increasing need of somebody like us who can connect it all together so businesses can get one platform that manages all of that. I think our view as a company is that we want to be this neo-banking of the future, where everything that your business needs to run their banking, to accept payments, to disperse money, all of it fits into the one single framework. For us, it doesn't really matter whether UPI wins, whether Google Pay wins, or whether it's wallets. For us, what matters is that businesses are able to collect money, able to process money, and able to disperse money with all the channels that are available.
Got it. Interesting. But Shashank, talking about the larger partnership with banks, we saw Aditya Puri also sort of indicate that fintech companies would not survive without the support of banks. Is this more a partnership, or riding on the wave of innovation itself can sort of change how traditional banking systems really operate?
It's absolutely a partnership. See, at the end of the day, banks have amazing amount of trust in the ecosystem, right? But the future looks more like, how can you take the traditional banking rails and build a lot of technology and product and innovate on top of it, right? So banks will continue doing what they do best, which is managing money and, providing banking infrastructure. But you will see a lot of new age companies like us coming on top and building amazing product and technology on top of it, which is relevant for today's age and today's entrepreneurs, and accelerate it from there. And it's a win-win kind of partnership. It helps banks as well as the new age fintech companies.
Ashil, you agree to that? Can banks and fintech companies coexist harmoniously, especially when there's so much disruption? And let's give it to banks. They have also been on top of disruption, trying to innovate. They got onto the UPI bandwagon quite early. But can banks and new age companies coexist, so to say?
No, I fundamentally agree with the fact that when banks and fintechs come together, that's when you actually have innovation. You can't build innovation without banking in the background, because there is a sense of trust. There is some expertise that banks have. You can't just off-road it and say, I will build everything from ground. At the same time, there are certain things that fintechs are good at, especially things like product and technology. And when that marriage happens, then you come out with something amazing. That's what we're trying to do with Razorpay X. And I fundamentally believe that when banks and fintech work together, that's when you see magic happen.
And that's when you can sort of create impact. Last question before I let both of you go. Harshil, lending in terms of capital that you launched last year, what traction are you seeing, and enough speculation about Razorpay entering the consumer lending space? When is that happening? Because everyone talks about how lending will be very crucial as far as financial products are concerned, also in terms of how you can monetize the entire platform, right?
See, we are really focused on building products for businesses. If you saw, like, we announced almost 7 products today. Almost all of them were targeted toward businesses because we feel that's a space that nobody else is building for, and there's a lot of need there. Consumer lending, there are guys who are already doing it. We'd rather work with them than build something of our own. So we have no intentions of getting into consumer lending right now. But on merchant lending, today more than 20% of our merchant base, which stands at about 6 lakhs now, take credit from us in some shape and form. That's a very high adoption in less than a year. We are dispersing more than $2.5 billion in just the cash advance product. So the scale we are seeing in lending on just on our platform is enormous, and we think that with corporate credit card, we'll have even more flexible ways of doing lending.